What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had more volatility as the stock market continues to sell off, even though the small caps did squeak out a green day. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.76% and we did get the second day in a row closing below that very critical support level at SPY 420. So at this point, it's very likely we see SPY coming back down to retest this low at 411, which is one of our critical support levels. If that level doesn't hold up, you're looking for the full gap close at SPY 400, and that still is our price target as long as we do have the strong confirmed downtrend. You could very clearly see we're still in the downtrend, all the moving averages are still negatively sloping and they're all still stacked to the bear side, so there's no reason to expect price action to just come out here and get a bullish breakout until we see confirmation in the price action. Now remember, volatility does work in both directions and you did see that with today's intraday price swings, but overall you can still see the price action is trending lower. The bullish breakouts are going to require a close on SPY back above 436 and then back above 444, which is our 20 simple moving average and our 50 EMA. On the way up, we're going to have resistance at 420, 428, and the full gap closes right around 433.8, so watch those resistance levels as well. Until we get bullish confirmation of a breakout, try not to be getting overly bullish because this is still such a strong downtrend. It's a downtrend until it's not, and remember that volatility works in both directions, so anytime you get to strong support levels, don't rule out the possibility we see a very strong bounce. Look for all of those resistance levels for possible areas to short at, and until we get a bullish breakout, continue to expect SPY to trend down towards 400. On the NASDAQ 100 triple Qs, we were down 0.46% today, and we're getting very close to that price target, which is the full gap close at triple Qs levels of 315. You can see we're riding on that lower Bollinger Band to the downside, and we're starting to see plenty of volatility, and we did get rejected right near that critical resistance level just below 334. So your bullish breakouts on the triple Qs will be back above 345 and then back above 357. So try not to get overly bullish until we get bullish price action confirmation. This is a strong downtrend and it looks like we're very likely coming down to our price target, but there's no guarantee we have to hit any of these levels to the downside. So you still need to respect the fact that any of these levels could still be support. The previous low that we did see the strong bounce of was just above 318, so you'll want to pay attention to that support level as well. On the way up, you're looking for resistance at 329, 334, and 341. If we start breaking out back above this 20 simple moving average, there's a very real possibility we're going all the way back up to resistance in the 350s, so look for that bullish confirmation of a breakout. In the Dow Jones, we were down 0.59%, and we see the Dow Jones did close below that support level at 328, so your next support levels are going to be 325 and 322.6. Below that, we have the confirmed double top price target, which is all the way down here at 315, and that is our confirmed price target as long as we have the bear trend. We're still in a bear trend, so that's still the price target in the near term, so watch that target closely. To the upside, you'll have resistance at 328, 333, 338, and right around 340, and you're getting a lot more bullish if the Dow Jones could get back above 341 and then back above 346, with your bullish confirmation all the way back above 350. So watch all of that critical resistance and try not to get bullish until you get those bullish confirmation breakouts. In the Russell 2000, we were up 0.55% today, so the small caps did squeak out a green day, but overall you can still see the price action is below all the moving averages and we still do have a bear trend. So at this point, the Russell 2000 is very likely going to retest that support level at 191, and if we start closing below 191, we're more than likely going to see the small caps trending down towards 170 with support on the way there at 183. Bullish breakouts of confirmation will be back above 200, back above 207, and then confirmation that we could be going to a bull market will be back above 212. Also look for resistance on the way up around 197 because that will be a critical level as well. On the Arkk ETF, we were up 0.98% today, but there's not too much to celebrate here because this is still a very strong downtrend and a very strong bear market. You could see that intraday low right around 57.5 did hold up on closing prices, but intraday we did go even lower right around 56. So it definitely looks like the longer Arkk is staying below 60 that it is trending down towards 50. Your bullish breakouts will be back above 69 and then back above 76. So don't get bullish until you see the bullish breakouts. This is very clearly a strong bear market that could be trending down towards $50. So respect the downtrend until you see bullish price action. On the VIX, we were down just over 3.6% today, but we still see the VIX trading at elevated levels closing above 35. We did see the VIX go lower on a day the SPY went lower as well, and you typically don't see that, but there's really nothing bullish about the VIX trading above 35 in such a strong bull market. So wait until the VIX at least breaks our support trend line and starts closing back down below 24 before you start getting overly bullish about the possibility of another bull market. The longer the VIX stays above 30 at these elevated levels, the more likely we're actually going into a bear market. So right now the VIX is telling you to remain very cautious of more potential downside, but do not forget that volatility works in both directions, so as you come into strong support levels, you could still see very strong bounces. On Bitcoin, we're currently up 1.64%, trading just below 39,000. And remember, we do have a confirmed double top if we get daily closes below 37,000, so that's going to be your most critical support level. Below that, we're going to have a price target that takes us all the way back down to 30,000. And below 30,000, we're more than likely going to see Bitcoin back to $20,000. We'll have support levels at 35,000 below that neckline breakdown, but that will look like a confirmed double top in the event we do close below 37,000. To the upside, you're looking for resistance just below 39,000, and the 50 EMA is currently sitting at 41,152. So don't get bullish on Bitcoin until it can at least take out this previous high and close back above 45,000. On NVIDIA stock, we were up 0.76% today, and we did bounce off of that support level at 210. And as long as we can hold that level and NVIDIA can come out here and break above one of these necklines, we will have a confirmed double bottom. However, if NVIDIA starts closing below 209, you're looking for downside price targets at 197 and 192, and I do think that could very likely be the bottom in NVIDIA stock. So in the event that NVIDIA does go down to 190s, that could be a great long-term trade, and set your risk at those levels accordingly. However, this is still a downtrend, and it's a downtrend until it's not, so don't get bullish until we can at least get back above 241 and start closing back above 250. As you've seen many times in downtrends, if you start getting overly bullish in a downtrend, you can get caught holding the bag as something continues to fall much more than you would ever imagine. That applies for a lot of these stocks and ETFs because they are in confirmed downtrends. So try not to get overly bullish on any of these unless you have a very defined risk level and you know exactly where you're exiting for a loss. On Tesla stock, we were up 2.46% today, but we're still on a confirmed downtrend, and we did see Tesla getting rejected at that resistance level at 827. That was previous support, so newfound resistance, and below 827, you're looking for support at 763, 709, and we still do have a confirmed price target at 592 because of the confirmed double top. As long as we're below 900 and we're in a bear trend, you're looking for Tesla to continue to trend down towards 592. Now the bullish breakouts will be back above 900 and then back above 937. So you can start throwing the double top price target in the trash can if we see Tesla trading back above 937. Until that happens, respect the downtrend and watch these support levels accordingly. On Apple stock, we were down 1.17% today, and we did break down through that support yesterday, and today we did go down for the next leg lower, closing just above 157. If we lose support at 157, you're looking for the next price target at 153, and below 153, you're looking for support at 147. Your bullish breakouts are all the way back above 167 and 2 daily closes back above 168. So try not to get bullish on Apple stock until you can see price action trading back above 168. On the way there, we'll have resistance at 162 and right around 164, so watch those levels as well. On the financial sector, we were down 0.59% today, and we're starting to lose a lot of our very critical support. We still do have a gap to fill above right around 37.6, but so far this is a confirmed downtrend, and we do have that 20 simple moving average crossing below the 50 EMA. So again, this is very bearish looking, and this is not good for the S&P 500. The S&P 500 bulls would really like to see the financial sector trading back above about 37.6. The industrial sector was down 0.61% today, still in the confirmed bear trend and starting to break down through some support levels. So you're seeing a very common theme across the market with a lot of these sectors in bear trends and breaking down through support levels. The healthcare sector was down 2.04% today and very close to closing that gap just above 127. We have the confirmed bear trend as of today, and we did break back down through that support trend line. So as you could tell, a lot of these sectors are still looking bearish at this time. The energy sector was up 1.57% today and still looking very bullish with lots of bullish volume, bullish price action, and a strong bull trend. Our next price target could be all the way up here just above 81, and you really can't expect this to reach a top and start rolling over until we at least lose our support trend line. So jumping back over the S&P 500, as you can tell, there's not a lot to be bullish about in this market with strong downtrends across the board and price action that continues to slice through critical support levels. Now that doesn't mean we still can't get a strong bounce off of any of these support levels, so you still need to watch the price action at strong support and remember that volatility does work in both directions. But overall, the trend is your friend and you shouldn't be expecting an overly bullish breakout until you get confirmation in the price action. So continue to respect the trend and remember that price action generally trends in the direction of the trend, and most of the trends across the board are still in the downward direction and with a lot of bearish momentum. So don't be getting overly bullish unless you're a long-term investor and you don't need that cash anytime soon and you're willing to hold that position for at least 10 to 15 years. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.